So let's look at what OPEC Plus is actually saying. Global demand remaining resilient. This is OPEC's view, but it is concentrated in non-OECD regions or growing regions. These are going to be regions in Africa, regions in India. OPEC Plus remains below projected demand for crude, implying a structurally tight balance. So the supply-demand balance from OPEC Plus's view or OPEC's view is that we're tighter than people imagine. So supply from non-OPEC countries will still grow, but it faces downward revisions, mainly because you're having rigs drop in the Permian, and here in the U.S., you can go in and see that. So product markets will be seasonally adjusted. Jet fuel was one of the biggest ads this past week in stocks in the U.S. I think that's a canary saying that travel might be limited coming up. So now, again, some of the bullish factors for what OPEC is saying. Summer transport fuel demand is set to increase. Now, the recent build in jet has a little bit of caution there. OPEC plus crude demand is exceeding the demand profile is exceeding current production, implying price support, which also implies that they can increase and release more barrels into the market, which is consistent with what their plan is. China and India oil demand remains strong across all sectors. Rig counts and capital structures in the U.S. are constrained, and low OECD crude inventories suggest a limited buffer. So if demand surges, we would shoot up in a big, big, big kind of way. That said, all the news and everything is bearish right now because you have tariff talks, because you have recession talks. So non-OPEC supply is still rising. This is on the bear side, albeit at a slower pace. Weak OECD European demand, that is in the bearish column on diesel and industrial fuels. Persistent global trade tensions and inflationary pressures. All these are negative on the economy. And a growing EV market, especially in China. I think it's BYU or BY, not BYU, BYV. Their electric cars are supposed to be revolutionary. We don't know because we're in the US and we don't have them. So the growing EV market, especially in China, is going to threaten gasoline and diesel demand longer term.